Good evening, guys. Stephanie, Digital Commando, and today we've got something a little bit different for you this evening. So loads of the questions we get from freelancers are around how to set themselves up. Should they be self-employed? Should they be limited companies? And all these bits and bobs. Now, for me, it's not my area of expertise. I'm great at Facebook advertising. That's what I teach you. But we've got an expert that's going to join me today, James Chisholm, who's going to talk us through the best practices and what you should be doing. So guys, if you have got any questions, please do drop them in the comments. We can see all your comments tonight. So do drop them in there and we'll get them answered for you. And if we can't, then I'm sure we'll endeavor to find the answers anyway. So guys, without further ado, let's bring James into the room. Here we go.
Evening, Stefan.
Good evening. How are you?
Not too bad, thanks. Yourself?
I'm good, thank you. Thank you very much for joining me tonight. And we're just going to pull up, I'm going to pull up the comments on the side so we can see them. So guys, like I said before, if you have got any questions for James, then please do drop them in the comments and we'll keep an eye on them for you. Right, James, before we get started, can you give us a bit of an intro, a little bit of an intro about you and about Mesher Consultants?
Yep. So my name's James Chisholm, and I'm an accountant, which does surprise people quite a lot of the time, because I don't probably come across as being an accountant. You won't see me suited and booted very often. I'm more of a jeans and a t-shirt and a hoodie type of guy. I like to make sure that my clients know exactly where they are with their business all the time, rather than just speaking to them once a year for things like compliance and stuff like that. So Mesher Consultants is essentially my business. I provide accountancy for small and medium-sized businesses. So that's both sole traders and limited companies. Providing them with everything that they need for their accounting side of things. So it's dealing with HMRC, Companies House, and all that sort of stuff. Basically, pretty much all of the accounting things that business owners who aren't accountants don't want to do. So I take all that off my clients' hands so that they can get on doing what they're good at, and I do the bit that I'm good at. So that's essentially it.
Absolutely awesome. Now, through running the academy and things like that, we've had so many questions come in regards to freelancers and what they should do. Now, I know this when I very first started back about 6 years ago as a freelancer, I had absolutely no idea. Now, for me, I was kind of getting paid by clients. I wasn't sure if I was supposed to be registered for that. I don't think at the beginning we were a limited company. We did that about 6 months in. And we were just kind of taking the money and going, okay, cool, I should be paying myself. We have no payroll set up. Then we had employees and we're like, we don't even know what to do. So it was all ridiculously confusing. Now, for a lot of experts that go out there and they do decide to set up as a freelancer, whether that's in as a digital marketing freelancer or a copywriter or anything like that, this is the bit that we never get taught by anyone. No one teaches us how to do the accounting and the bookkeeping. We're very good at what we do, but this is the bit we generally get stuck at. So what would you recommend? I'm just going to let you run with it.
So realistically, each individual person entity is always slightly different. So there'll always be nuances around the way that I'm talking about here. But essentially, whether you go freelance or limited company, the first things that you want to be doing are basically letting HMRC know. So if you're a sole trader, it's simply registering for self-assessment with them. And you should be doing that within probably the first couple of months to make sure that you don't fall foul or anything there. If you set up a limited company, as soon as you register with Companies House, HMRC get a notification about that and you'll start receiving things through the post from HMRC. It's really, really important that I think it's the first letter that they send you will give you your company unique tax reference number. That number is super important. So what I say to all my clients is, if you receive anything from HMRC or Companies House, take a scan of it, store it somewhere digitally so that if you ever need it again, you can still find it. Because the amount of people that will come to me, the day before a deadline, and you say, have you got your company UTR? Like, what? Sorry. Or if you're trying to file with Companies House, it tends to be the authentication number that is an issue, and that's one of the things that they send out. And again, if you haven't got it and you're leaving it to the last minute, you're not going to get it from HMRC or Companies House in time, and that's when you start going into the world of fines and things like that. So that would going to be one of the first things that I would do. The other thing that I see a lot of people who are setting up for the first time, not entirely sure what they're doing. They don't set up a business bank account, or it's hard to sort of describe that when you're a sole trader, but you should be setting up a different bank account that's for the business at that point. I deem it very much as the foundations for the business. If you can separate yourself away from whatever the business entity is, it makes it much clearer to know where you're going when you get bigger and things start to snowball further down the line. So very first instance, let HMRC know that you're there, and get yourself a business bank account are the very first things that I would be doing.
Do you recommend any particular bank account? I know that lots of people have moved away from the high street banks. I know that we definitely did. I think about maybe a year or nearly 2 years ago, we moved away from the general, I think like NatWest and Barclays, and we went across to Starling, who have been absolutely fantastic in my opinion. Any recommendations on which banks people should choose?
So for me, I love Starling. I love the speed of which they react, how accommodating they are to businesses, and how readily you can get the information that you need from them, and also the way it integrates seamlessly into things like accounting software and things like that. The bigger banks, the high street banks, they're still doing some good things out there. You can get free banking for like 18 months and stuff like that with them, and they do have sort of ancillary things around the outside in terms of business support and stuff like that. So I wouldn't necessarily discount them all. Certain ones are better than others. I think the bounce back loan situation sort of highlighted that more than anything. I've heard some horror stories about some banks not getting those through at all, and then I've heard other stories of high street banks. Santander was the one that I heard that was getting funds. I think it was less than 24 hours after it was launched, or they could launch it, that they had the funds in the businesses' accounts for them. So some of the high street banks are doing really good stuff. Other ones aren't, I'm afraid. But for me, I've had no issues with Starling. They've been great, and yeah, I would highly recommend Starling as a bank to go to in that respect.
You touched upon linking in with things like accounting software and bits like that. Again, is there any recommended pieces of software that you use? I know that there's some on the market that many people would have heard of, like QuickBooks and Xero and these sorts of bits. And the one that everybody used to use, I can't remember what that one's called.
Sage.
Sage.
Yeah.
We had Sage at the beginning. I wanted to kill myself.
Yeah. So back in the day when it wasn't in the cloud, I used Sage Desktop, which was fantastic. It was a great piece of software. And when the cloud started coming around, I was doing a lot of research about the different options that were out there. And Sage just missed the boat. I think they rested on their laurels. They thought they were going to get all of the trade that they'd previously had on a desktop, and when it came down to it, they actually changed the software that much that it wasn't anything like anything that we'd seen on the desktop version, which was completely bizarre. My two preferred are Xero and QuickBooks, but that's a personal preference. The thing that I always say to people is it depends who's going to be using it the most, because it's really a personal preference. You look at cars out there. There's loads of different car brands. They all do pretty much the same thing, but certain people will like a different car brands for whatever reason. It's just personal preference. So whoever's going to be using it the most, I would say, get one that you like. The worst case scenario is that you set off with a piece of software. Whoever's supposed to be using it the most doesn't like it, so they don't do it. And then the pile of accounting that they need to do slowly builds up. They get to an end of the month and they've got a lot to do. And they look at it and go, oh, no, I'll leave that. And then the end of the next month comes along and it's twice as big. And it just goes on to the point where you've got to do something, which is the end of the year. And then you've got a year's worth of accounts to do. And even accountants don't particularly like doing a year's worth of accounts because it's a massive job to try and do it. So that would be the main thing for me, is find one that whoever's going to be using it likes using, and do it little and often. So I go into all of my clients' accounting packages every day, just looking at what's happening, making sure that things are reconciled and stuff like that. And it never becomes a big job to do. Then it's just a little bit as we go along. So yeah,
that's a good idea. I think for us now, guys, for everybody watching this who's one of our freelancers inside the academy, we always do recommend QuickBooks, because that's the one we've had experience with, and most of the time it's going to be you guys using it, especially in the beginning, before you can afford to hire somebody like James. Like, in the beginning, it will be you. So personally, we found that one was the one that had the easiest user experience, because most of us are quite creative, and we like it to be nice and very easy to use. We like that side.
Yeah.
Xero was a little bit more, does what it says on the tin, but maybe not nice to look at. So yeah, guys, I think remember that you're going to be the one using it. So remember that is going to be a big thing in the beginning, especially. So James, one of the biggest questions we always get is the difference between people being registered as self-employed and registered as a limited company. Now, at what point should a freelancer be looking at changing from that kind of self-employment status to going into limited?
So there's a couple of different angles to this. So from a tax point of view, you want to be getting, or you'll be looking to change from a sole trader to a limited company when you get to around the £35,000 sort of take-home mark. That's generally the point where the tax situation trips over. Obviously, as things change, that number will change. Gradually, the government have been moving self-employment more towards pay-as-you-earn employment sort of status, in terms of the way that the tax situation is equated between the two. So it's going to get to the point where there's essentially equality between, an employed person and a self-employed person. It will probably also come to the point where self-employed people, instead of filing once a year, will probably end up filing once a month. And that's where the accountancy products come in, to allow that to happen quite quickly and seamlessly between the accountancy product and the HMRC in terms of that side of things. The one benefit of that is that you won't ever build up a massive tax bill, because you'll be paying it as you go along. So that's one good thing out of that. But we're probably talking 5-10 years down the line before we get to that sort of point.
Was the idea around the making tax digital change that they implemented?
Yeah, essentially. And the other aspect of that is that they want to be able to analyze the data more frequently and more efficiently. So if they're getting all of the data in digitally, they can run algorithms through it. If anything pings up that's out of kilter with what they expect, there'll probably be, I think, a lot more what I would call an arm's length investigation of people. So it will be you receiving a notification somehow, probably through the government gateway system that you use through HMRC, to say, we've spotted this, could you explain why this has happened? It will mean there are a lot more small HMRC investigations, rather than the inspector coming out to your business premises and routing through all your documents, which will probably make HMRC a lot more efficient in that respect, which will be good as long as you're filing everything that you need to file in the right way. So that's where it becomes even more important to make sure you have those documents, the backup to what you've been doing. And again, it goes back to when you first start, really setting it up in the right way, because if you haven't, then you may fall foul of it further down the line.
Yeah, I think that's good. And in the long run, because we spoke about this, I spoke about this with one of my friends actually, when we were talking about when VAT comes into it. We'll probably talk about VAT in a minute. But when VAT comes into it, you charge obviously VAT on top of what we charge, guys. We'll go on to that in a minute, because everybody who will do like DC 100K will be VAT registered from the beginning, naturally. Now, when you charge VAT, obviously you have a VAT number. Now, then as making tax digital, again, I don't think they've got, I may be wrong, but they haven't got the capability to do it now, but they'd be able to cross-reference those tax numbers and go, okay, well, this company's charged VAT here, here, and here. They can cross-reference that with everybody who's claimed against VAT that they've paid.
Yeah.
Right?
I imagine they'll get to that point somewhere down the line. They're not there yet because at the moment the systems aren't recording necessarily the VAT number coming into your accounts. If you're scanning stuff, it will be there somewhere, but it's not being generally registered alongside that transaction. So it will probably get to that point though, which is a bit similar to the way that the EU works at the moment in terms of cross-border VAT side of things. In terms of the limited company sole trader aspect of things, the other side of things is really your exposure, I suppose, to potential litigation and stuff like that. As a sole trader, you're completely open, individually, personally, to anything that happens. So, you know, it could be anything that impacts the business. They can get through to your personal assets in terms of needing to square things off if that needs to happen. With a limited company, not saying that it can't happen, but generally there's a view that there's a corporate veil across the individuals, so that the company itself can have all of their assets stripped to pay for any litigation that happens, but the individual themselves generally wouldn't have their personal assets put on the line unless you've got things like personal guarantees and loans and stuff like that. But you're going into that knowing that at that point that you've put that sort of exposure on your own personal assets. So that's the sort of the two main aspects of the difference between sole trader and limited company in that side of things. So that's essentially it. If you're happy being a sole trader, you can go pretty much as big as you want, but you generally find that people, once they get to a certain level of income, want to switch over to a limited company anyway. There's the odd occasional sole trader that's still operating on a higher level of turnover, but it tends to be rare now.
Yeah. I suppose you'll find that a lot with maybe builders and things like that.
Yeah.
Normal self-employed rather than limited.
And tends to be probably the older generation as well. It's what they've always done, so it's got to be what they always do. So yeah.
This is when you'll get having fun when they're bringing in big stacks of paper because they don't do anything right.
I try to avoid that as much as possible. Try and get a gauge of people and what they're like before they come on board, and whether they're willing to use the technology, because the technology is what makes my life easier and gives me all the data that I need early. So
all right, great. So we touched on VAT. Just to remind people, what is that? What is VAT? For some people, it may not even be that. Everyone knows they pay it, but for some freelancers may not be too familiar with what it is from a business aspect. And what are the kind of thresholds on that as well?
So VAT is value-added tax. Basically, it's the government adding on tax to certain items. There are different levels, but generally you're looking at sort of 20% is the majority of things. You'll see on things like your energy bills, they're at 5% rather than 20%. And then there's the whole difference between your food items, what is described as being a necessity, and what's a luxury. You won't pay VAT on a necessity, but you would pay on a luxury. That's where the whole I think it's Jaffa cake. Yeah, Jaffa cakes comes into question as to whether it's a biscuit or a cake, because a biscuit doesn't have VAT, but a cake does. So so VAT's added to most things. You'll pay it most of the time as an individual without even knowing it. To charge VAT, you have to put your VAT number on the receipts and things like that you give out. If you're doing invoices, you have to include more detail, like the address and the name of the company and all those sorts of things alongside those details. You can be VAT registered without making any money at all. Right from the beginning, you can self-declare registration for VAT yourself. If you hit £85,000 worth of turnover, then you have to be VAT registered. And if you're looking like you're on a run rate to 85,000, then you really need to be thinking about being VAT registered sooner rather than later. There are circumstances where you may want to go VAT registered, like I said, right from the beginning. It depends on your clientele. So if all of your clients are VAT registered businesses, go VAT registered straight away, because they won't feel the VAT. If I charged £100 and I'm VAT registered for my services, I'll charge that company £120 for those services. That company in their accounts would see a cost of £100, but then they claim the £20 back through the VAT scheme. If I wasn't VAT registered, I'd still charge £100, but the £20 wouldn't be added. That company would see £100 in their accounts. So for a VAT registered business, you being VAT registered doesn't make a jot of difference to them.
Yeah.
To an individual, that's completely different.
Yeah, and it looks a lot more professional. I think again, the guys that watch this are part of the DC 100K program. You'll go VAT registered from the very beginning, because naturally we know you're going to hit that threshold within 12 months. So it makes sense. Just get there and get used to doing those tax returns every 3 months. Doesn't make a difference to what you earn in regards to the 100K per year. It just goes on top. Essentially, it's very good for your turnover. Still contributes to turnover, which is great. So we've gone into a bit of VAT there. What time are we on? Oh, we're good. Right, let's talk about employees and payroll. Now, even as freelancers, at some point, we are going to need to make full-on hires. And this normally comes into practice for a lot of the guys that finish the DC 100K after 8 weeks, accelerate that, and then would like to do the next course, which will actually take people from freelancer to agency. Now, when we hit agency, one of the first things we do is we outsource everything to give you the time. And then we start to bring in those full-time people and then bring all that work back in-house. Now, when it comes to things like payroll, and even we're probably better off starting off with payroll as an individual, maybe if they register as a limited company. I know the DC 100K guys will be registered as limited companies and VAT registered. Now, what is your advice as to how they pay themselves in regards? Some people don't know about dividends and what they can take in regards to tax implications and things like that. So what would you advise?
So first up, if they're just the employee within their own company, we generally run at £732 a month. It is at the moment, as a wage is probably the easiest way to explain it. At that level, you don't pay any national insurance or anything like that. That's you, the individual, or the company itself. And it's the most tax efficient way of getting the money out of the company. The other aspect of that is the dividends. You get £2,000 as any individual in the UK, tax-free in terms of dividends. So again, it depends on your situation. If you've got shares somewhere else in perhaps a company that you had, a job with before, you might be using a chunk of that tax allowance there, but generally that's the sort of way of looking at it. And then dividend tax is less than PAYE tax effectively, so it's a more efficient way to get money out of the business. If you've got a partner, wife, you can use them and use their dividend pot if they're not using it to extract money from the business as well. But we really need to look at the individual position of people in that sort of situation. The key thing there to do is, if you do bring a partner on, is to put them in a different share category. The reason to do that is that if things change in the future, you might not want to give out the same dividends to both people. So if you have them in different share classes, they can be given different amounts of dividends. And that's fine. So that's a really key thing to do. But if you're looking at that side of things, I really would discuss it with an accountant, because it can make a massive difference in terms of your tax situation. So it's worthwhile definitely having a conversation with somebody about your personal situation there.
Do not give them voting rights in your company.
No, absolutely, yeah.
Which is always good. It's good because I wrote that one down though, and I was like, "Oh, spouse!" I remember that from somewhere else. So that's always good. Now we've highlighted something really big there, and I know straight away people are going to be like, hold on a minute, I can't live on £732 a month.
Yep.
Now, for a freelancer that needs to take out, let's say, £2,000 to £3,000 a month, depending on where in the country they live, can they take dividends monthly, or do they have to take it annually or quarterly? What's the best advice, because they need to take that much money out to live?
So I always work it that they can take it out monthly. If we do need to change things towards the end of the year, then we can. But take out what you need, essentially. There's always ways of dealing with it. Don't go short on taking money out of the business. At the end of the day, if it isn't the most tax efficient way, but you need it to live, then absolutely do it. So yeah, that would be my advice on that side of things.
Cool. I keep disappearing from the screen, but I'm back. It's good. Okay, so sorted. So we've managed to sort our own payments out. Now we're going to go into the point of where we start to take on some staff. Is there a more tax efficient way to do that? Now, I ask this for the reason that lots of people say, especially in our industry, that sometimes it's better to take people on as a contractor rather than as a full-time employee. Now, as a business, I know there's some bits that you might not want to go into in regards to the legality and the HR side of things, and people can be claimed as a full-time employee and things like that. But from a purely financial perspective, is there any benefits of going to one way or the other?
At the end of the day, you'll probably end up spending about the same if the subcontractor is charging their rates properly. In theory, if the subcontractor is charging what they should be charging, they should be including things like money for potentially their holiday pay, money for their pension, money for the tax that they need to pay. So in theory, it should be about equal. Generally, what you'll probably find is a subcontractor is probably cheaper. The thing there is to really figure out in your business whether that's the right option for you. The big issue there from a financial point of view further down the line is that could that person walk away with that chunk of business? And how likely are you to be able to, sort of stop them from doing that to some extent? With an employee, you probably have a lot more control over that. And what they can do. You've probably got a lot more insight as well with an employee as to what they're doing, and a lot more ability to view what it is that they're doing and make sure they're productive at the end of the day. The flip side of a self-employed person is, as long as the results there, doesn't really matter how long they're working on it. So it's how you feel about it, I think, a lot of the time, and not really a massive sort of financial consideration if the subcontractor's charging the amount that they should be charging. But you probably find that they're not in a lot of cases.
Absolutely. I think this is one thing to remember for all the freelancers that are watching this, that a lot of you watching, I'll have already spoken to you, either face-to-face, on LinkedIn or something like that. Now, do remember that previously, before you've spoken to me, you were charging about £25 an hour, which is mental for what you guys do. So you do, like James just said, you need to incorporate things like you are a freelancer, you're essentially a contract of somebody else as a freelancer. So therefore, you do need to be including things like your holiday pay, your travel, and the rest of it. Everything needs to be included in that hourly rate, which is why you should be at about £85 an hour minimum. If you're delivering great results for your clients, as you have to do. So remember, do not undercharge at all. It's one of the biggest things we push. The amount of people that I spoke to, the amount of you watching right now that we're charging £25 an hour is crazy. Do not do it. You're worth a lot more than that, especially if you've gone through the academy. So please remember that. Okay, awesome. James, I think we've covered absolutely loads. So I think it's nice, short, sharp. We've done, I think, half an hour there. So guys, hopefully you got as much info as possible. Now, I understand it's late at night. We've done this a little bit later than usual because we know that some people were obviously looking after children and busy and things. So what I want you to do is, guys, I'm going to let James go now because it is a Thursday evening. But what I want you to do is go away, think of your questions and drop them in the comments. So regardless if you're on LinkedIn, Facebook, Twitter, Instagram, or YouTube, wherever you are watching this, please do drop the comments into the comment section, and we will get those questions answered for you at a later date. James is going to keep an eye on the chat, so am I. And if I can't answer a question, James can't answer a question, then we'll find it for you. But pretty positive James will know the answer for you, so you'll be fine. James, anything else that we need to cover today that you think people will need to know? I think we've got quite a lot of stuff.
I think just, absolutely make sure you're on top of it from the word go, and don't let things mount up. That's the worst thing you can do with accounts and things like that. So get on top of it from day one. Make sure that you keep your receipts as much as possible, and just keep doing it little by little all the time, and you'll be amazed how relatively easy it is to keep on top of things, which is hugely important in running a business.
Fantastic. James, if anybody needs your help and needs to get hold of you, where can they find you?
So if you type in Meshy Consultants in Google, I'm pretty sure you'll find me. My website is meshyconsultants.com. And if you want to get in touch with me, just add a James at the start of that, and you'll get through to my email.
Awesome. I'm just finding the website. I'm dropping it in the comments for everybody now, so that if they do need to find you, it's nice and easy. I was going to make sure I got the right one. Yeah, that's the right one. We don't want to send them somewhere else.
I'm going to say if it's purple, it's fine.
That wouldn't help me. But guys, if you do need to get hold of James, you need some help with your accounts, then I've just dropped that in the comments for you now. So please do get in touch. The exciting thing is, obviously, we have got DC 100K that is starting very, very soon. 8-week course that will take you from zero as a freelancer to £100,000 per year. Sounds incredible. Actually significantly easier than you think. So guys, if you want to know more about that, then please do get in touch with me. We'll make sure you get booked onto the course. That's it for tonight. James, thank you very much for joining me. Guys, everybody who watched, jumped in the comments, really appreciate your time. And please do share this with anybody you know who is a freelancer or self-employed that needs a little bit of advice. We welcome the comments, and we do practice what we preach, which is show people you can help them by actually helping them, which is what we're all about. So guys, have a fantastic evening. I will see you all on Monday at 11 a.m. for another episode of the Digital Commando Show. So make sure you tune in for that. And apart from that, that's it. Let's go and have a drink, James. You can put the coffee down and have a proper one.
Cheers.
That is it for tonight. Peace out. See you later.